South Korea elected its first crypto-friendly president last week. A lot of election promises for crypto investors, but what can he really deliver? Welcome to the Daily Forkast, March 17th, 2022. I'm Angie Lau, Editor-in-Chief of Forkast, covering all things blockchain. Well, President-elect Yoon Suk-yeol pledged to institutionalize crypto and advance Korea's crypto industry during his campaign. Well, in a forum today, the industry has set out ideas on how exactly those promises could be developed into real-life policies. Why this is an interesting development for the rest of the democratized world. We're going to take a look at that story plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Well, let's kick off with a huge crypto policy decision from Ukraine. It remains a country in conflict, and now it's taken a big leap that could help with support by legalizing cryptocurrency. Ukrainian President Vladimir Zelenskyy has signed a virtual assets bill into law. A crucial move as the country is receiving millions in crypto donations for military and humanitarian aid in its war against Russia. The Ministry of Digital Information says the law determines the legal status of crypto assets and that it will be regulated by the National Bank of Ukraine and the Commission on Securities and Stock Market. In a tweet, the ministry added that the law allows foreign and domestic cryptocurrency service providers to operate with legal accounts in Ukrainian banks. To date, the country has received at least $80 million in crypto donations from DAOs and direct transfers to the government's crypto wallets. Now, from a major policy move to a big business decision, Chinese crypto mining rig maker Canaan has announced plans to buy back up to $100 million worth of its own shares over the next 2 years. Canaan chairman and CEO Nangeng Zhang said the company is aiming to drive value for shareholders with the move. It follows completion of the Nasdaq-listed company's $20 million repurchase program that started in September of last year. In a separate statement, the company provided a warning over an impact to its business outlook due to machine delivery delays caused by the resurgence of COVID-19 in China. You can find those stories and more at Forkast.News. Well, over in South Korea, crypto pledges were key for President-elect Yoon Suk-yeol while he was on the campaign trail. And today's policy forum on the next government's digital asset policies, organized by the Korea Society of Fintech Blockchain, saw the industry getting together to discuss exactly how those promises could be fulfilled. Forkast's Danny Park followed all the action.
South Korea's digital experts gathered at the National Assembly earlier today to discuss how President-elect Yoon Suk-yeol's crypto campaign promises could be implemented. Investor protection was high on the agenda, as was a look at the potential for reversing the 2017 ban on initial coin offerings. Kim Gap-lee of the Korea Capital Market Institute says investors need to be able to make informed decisions.
발생하지 않았을 문제점이 굉장히 많습니다. 간단히 말씀드리면요. 먼저 투자 정보가 굉장히 불충분해요. 그러니까 발행 공시 측면에 있어가지고는 백서가 지금 다 영어로 써져 있어요. 그러니까 국문 백서 발행 의무화되는 것 굉장히 중요하고.
Kim added that companies should be obliged to reveal any large-scale crypto investments or changes to their digital asset portfolios. Currently, this is something that is not mandated by law. Back in February, investors suffered after the South Korean game developer WeMade sold around $200 million worth of its native token WeMix without prior notification, causing both the token and company stock prices to plummet. Meanwhile, the head of crypto exchange Upbit's Investor Protection Center followed up on President-elect Yoon's pledge to reapprove ICOs in the form of initial exchange offerings.
그런 과정에서 분명하게 정보 제공 문서를 밝히고 백서 형태로, 그리고 그 백서에 밝힐 내용은 규제 당국이 템플릿으로 정해줍니다. 그리고 이것을 심사를 통과하고 그 발행자도 서약합니다. 나는 사기치지 않습니다. 제가 아는 범위에서 정확히 적었습니다. 기존의 백서들 맨 끝에 보면 책임 안 진다는 표현들이 있죠. 정반대되는 겁니다.
And finally, Lee Soo-hwan from the National Assembly Research Service pointed out that new policies for digital assets should embody environmental, social, and governance elements, especially with rising environmental concerns over crypto mining. We'll be keeping watch to see how things progress once Yoon is inaugurated as South Korea's president on May 10th. For Forkast, I'm Danny Park.
Well, Joe Biden's much-awaited executive order on cryptocurrencies lays out a broad strategy for how aspects of the crypto sector would be addressed. But does it do enough to answer the questions that market participants have? Well, let's bring in Mark Lamb right now, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform, for his take on this landmark order. It's great to have you, Mark.
It's great to be here.
Okay. So when it all came down, the White House order outlined 7 key areas of focus. Let's see if I can recall them all. Consumer and investor protection. We have financial inclusion, among others. What's your take here? Could this be a catalyst for new products, for new coins?
The biggest thing about this executive order is that the language is extremely positive, and the tone that they're using is that the US wants to become a leader in the crypto field. And I think this is just because we're seeing more and more competition for regulatory frameworks and places for entrepreneurs to set up crypto businesses abroad. And so the US wants to actually be a home for that type of activity. And there's no new regulations that were actually laid out. There's no new specific policies, but it's really a call to action for the US and different regulatory bodies within the US to put on a united front. In a lot of countries, you go to their regulators and there's one financial regulator, maybe 2 that you're dealing with. In the US, there's more than 60 different regulators involved in regulating crypto businesses today. FinCEN's been regulating crypto businesses for 6-7 years, and that's been going really well. But you have other parts of the US government where the regulations, the policies are not clear, or it's a policy of regulation by enforcement rather than by specific published policies. So this call for a united front, this call for cohesive regulation, clear guidance to the industry, this is really exactly what companies are looking for.
The order also spoke about national security risks posed by digital currencies, and that's something we've all been talking about extensively, Mark, with the Ukraine crisis and worries that crypto could be used to evade sanctions or route money by Russian oligarchs. Do you have any thoughts there specifically?
I think the powerful thing about what we've seen in crypto in the most recent use case is that for large-scale money laundering, it's a pretty terrible tool. The public trackability of blockchains makes it extremely unwieldy and difficult to use for that. And I think other traditional mechanisms of banks and payments are basically facilitating the lion's share of that. Whereas what you do see is for the average everyday users of money in these economies, Ukraine, Russia, other parts of the world that are affected by war and terrible outcomes, they turn to crypto as kind of this refuge of payment mechanism of last resort, and so they're able to use crypto as a way to solve their own day-to-day problems. And for large-scale criminal activity, it's just unworkable. And so it's really, I think it's this is the reason why the U.S. government has told exchanges not to stop processing trades for Russians.
The individual is still at least protected somewhat. Let's talk about the White House here, also talking about exploring a U.S. CBDC. We know that China is almost light years ahead, almost in the final phases, if not already ready there. What's now the next step here for the United States, though, especially as non-government stablecoins have drawn questions from regulators, most recently Tether for not being sufficiently backed by USD? Do you think that there's a challenge in play here?
I think there's a huge opportunity because US dollar stablecoins are proliferating the dollar further afield. And so the dollar has this network effect and sort of reserve currency status as a payment mechanism for oil and a payment mechanism for all kinds of transactions and global settlements. But it's for retail transactions abroad, they're still mostly using their own local currencies. But now with stablecoins, US dollar stablecoins, people are using real US dollars for local trade. The question is whether they go from a regime where there's lots of private stablecoins competing to one where the government is also throwing its hat in the ring. And I think the biggest question in that regard is, are they willing to, in some sense, disintermediate the banks? You see this in the Fed's policies papers around stablecoins, where they talk about credit disintermediation, and they want banks to be heavily involved in credit disintermediation because they know that, facilitating credit lending activities, all the activities of normal banking that finance the economy, aren't something that the central bank can do itself.
Mark, always a pleasure. Thanks so much for joining us today.
Thank you. Great to be here.
And that's the Daily Forecast, covering the latest developments in blockchain from our vantage point right here in Asia. For more, visit Forkast.News. I'm Editor-in-Chief Angie Lau. Until the next time.